for the latest local and national news that can impact you if you are in the market for real estate. Here are your hosts, the Kingwood mortgage guy, Mike Durr, who uses his 25 years as a mortgage professional to help people improve their credit, and Joe Salas, an accomplished home inspector, real estate agent, and trainer of new agents for Byrd Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Let's get started. Yeah. Well, hey there, this is Mike Durr, Kingwood Mortgage Guy, and I want to thank you for showing up. Hopefully you're out there. If you get a chance, I'd love for you to subscribe, like, make comments. Love to see those comments come in, and I really appreciate when you subscribe also. So I think Joe's actually having to work today, and so he's not going to be with me today, but I have got a full tilt boogie bunch of information that I wanted to go over with you. And so what I'm going to do is I'm going to kind of give you the lay of the land here. And the first part of that is what we're going to cover today. So what to know about co-buying a house. Now, we haven't talked about that before. What is an ADU? It's another one of the interesting things. You know, I kind of flashed over the name of this session is Interesting Strategies to Buy or Own a Home. And so these are some of the things that I pulled into that title. An ADU, I'll explain what that is, what you should know about buying a foreclosure, tax deductions for homeowners. I'm not always mention that. It's the end of the tax season, but then you're going to be doing your taxes within the next quarter. So I thought that'd be a good thing to talk about. We're talking about the bond market and rate check, and the bonds and rates are just out of sight right now. And then the housing seasonal calendar. So there's an opportunity here that I want to share with you. But first off, what I'm going to do real quick, let me see if I can do this. This is out. Let's see. Maybe not. Go back. Bear with me here. Maybe I can do. Nope, not going to do that. Present. Slides. No. I'm stuck in the nip. Oh, there we go. That's what I wanted to do. Okay, so what I'm going to do here is I'm going to show you a thing that I looked at. Share screen, and the housing report, share. And actually, I want to show that. And this is So hopefully that was recorded there, and I didn't just kind of set you aside for the last couple minutes. But I thought that that really hit some interesting nerves there. It talked about the bank of mom and dad, and that's something that we should all consider. If there's an opportunity for parents to provide you with the money for a down payment or closing cost, that is a very positive thing. And I know that the the parents want the best for their children, I'd say in almost every case. And if there's a way to make that happen, that is a very good way to go. So we talked about that. Let's see what we should know about buying a foreclosure. There's not a lot of foreclosures out there, but there is, and I'll go over some of the ways that you can find them. And obviously, there's some precautions that you need to take when you're buying a foreclosure. We'll talk about those. Tax deductions for homeowners. There's a real, uh, I guess it's a two-sided thing, whether you have enough of those to make up for the standard deduction that they give you. It's one where you have to itemize, and I'll go through that. Uh, excuse me, bond market and rate check, and then a housing seasonal calendar. So I encourage you to stay with me through this whole process because I really think that that's an important part. Okay, so let's just get on the road here. So what is co-buying a house? Co-buying, what? What are you talking about? Well, the image that I have pictured there is a couple young ladies. These are not, they're friends, they're partners in this house that they bought. And so one of the things that I wanted to share with you is it's okay to buy a home with a partner. You just have to make sure that you understand all the subtleties of what happens if somebody gets tired of living with you is basically what it is. But um, this is one of the largest expenses that anybody, particularly a single person, has. And sometimes by going in and partnering with somebody to do that, it makes it a little more realistic, and you can benefit with having a partner. So this is kind of how it works. Co-buying a home involves buying a house with one or more people, commonly a partner before marriage, relatives, or close friends. This arrangement can make home ownership more affordable in some cases, but it also means you have shared liability for the debt. Before moving forward, keep in mind that co-buying can put a strain on your relationship and your credit score if either party fails to uphold their end of the agreement. So it can be fantastic as long as you've got a good partner to do that with. If in any scenario, all co-owners will be listed on the title and on the mortgage loan. So what happens is the reason you have a partner is to support and help make your financial looks better. That means down payment, that means income, so your debt ratio is good. And it's basically like sharing a room in an apartment, but with the positive part of getting to reap the benefits of building equity at the same time. So there's a couple things there on how to do it, and this is kind of interesting. I've got on there joint tenancy. Each person shares an equal, undivided ownership in the home, regardless of how much they invested. That's joint tenancy. Owners do not get to choose their own beneficiaries in the event of death. Instead, the surviving owners automatically take over the deceased person's share and divide it equally among them. So that is joint tenancy. And one more thing, each owner can usually sell their each owner can usually sell their share in the home to another person without the approval of the co-owners. Now that's not always great. Now tenancy in commons a little different and maybe more flexible. Each person does not share equal ownership in the house. Instead, ownership shares are equal to how much a person invested in the property. Each owner is able to choose who receives their share of the property upon their death. So if you're unsure about which title works best for you, consider speaking with a real estate attorney. Anyway, so I thought that that was kind of good information. Getting financing, when you get financing, the lenders are going to look at both of your income as if you were married and just look at the credit, debt for each one. Hopefully, with the combination of the good income and the low debt, you should qualify comfortably. Also, joint qualifying, you don't necessarily have to occupy the property to do that. It's co-occupying, or it could be a non-occupant co-borrower that's on there. And that is a very positive way to do it, particularly if it's a relative that just happens to have the wherewithal to help you. And usually you're not, when you're doing it with a friend or a partner, you usually are both taking advantage of living in the property. So anyway, I thought that that's kind of an interesting thing. And that is co-buying a house. And I can't, what I see most of the time is a parent steps in and does a non-occupant co-borrower. I've seen a young lady and a young man do it. They were not involved with each other. They just did it as partners. It seemed to last, gosh, for 7 or 8 years. They did ultimately, one of them, I think, bought the other out, and the other one just stayed at the house. So there are a lot of options there. And the reason I wanted to bring it up is because we don't always talk about those kind of things, and a lot of people don't know what you don't know. So let's move on to the next one. What is an ADU? Well, ADU is an acronym. The mortgage industry loves acronyms. That's for accessory dwelling unit, and it is an additional residential unit on the property of a single family home. Now, it's popular because the current housing market, particularly out west, where there's just not enough homes. I mean, the homes that are out there are expensive. And so what a lot of people are doing, and even in some cases, the municipalities are encouraging this for people to build some kind of accessory dwelling unit so that they could house somebody. Now, the benefits of this is, one, you get a return on your investment. One, the value of the house, if it's done correctly, is increased. Plus, you might earn some passive income. And let me tell you, there's nothing better than having passive income. And also, the big one is help alleviate the housing shortage. So it's not, in this situation, this is not where you're going to actually sell the accessory unit to somebody. What you're going to do is you're going to put somebody in it. Most of the time, it might be a family member. It could be a grandparent. It could be a son or daughter, or it could be a couple. It just depends on your family. And in this picture, it's not a very big picture, but it gives you an example of, in this case, I think I looked up garage accessory dwelling unit, but there are a lot of people that just put a separate unit right in their backyard, if you will. Now, if it's a big lot, obviously that allows for a lot more space there. And I had something here on the accessory dwelling unit. So it really boils down to research on building codes. If you're doing this in a neighborhood, and like Kingwood, I'm not even sure Kingwood allows this, but research on building codes, regulations, and zoning laws, ordinances, and HOA policies. And the bottom line is you'd want to check with an attorney before you did anything like that. Now, I will tell you, I know that there are homes in Kingwood that have a garage apartments. And so I'm assuming, I've seen them in Trailwood, I've seen them in Bear Branch. I'm sure that there are other places. So I'm pretty sure that unless they're just grandfathered in, you can do that kind of thing. Where does the financing come from? Well, that's an interesting one, because if you're in your home and you have one of those locked in rates, 2 to 3 to 4%, you don't want to get a cash out refinance, but you could get a home equity line of credit, or you could just do it out of your cash and pay yourself back, or you might even be able to get some kind of home improvement loan from a credit union that would go on top of your existing mortgage, where you could actually improve the property with a garage over, or an apartment over the garage. So that's an interesting way to go. And obviously the financing part could be a second lien. Now, I'm not sure that in the realm that I operate in, I could do that, but the banks and the credit unions surely could. So renting and managing your accessory dwelling unit. It's easy for me to say. So first, you just have to look and set a competitive rental rate. You get a lease agreement. What I always encourage you to do is contact a realtor to get a lease agreement. And it's got to have a rent amount. It's got due dates. It's got occupancy rules. It's got a security deposit. You want to screen any prospective tenants, assuming they're not your family. A thorough screening process would be just absolutely critical to that. Avoid any discriminatory practices, particularly if you're not doing it with family. You can probably do that with family. Ensure a family and equal housing opportunity. Ensure that you're being fair to people and not picking somebody because of their race, their religion, or any of the things that are prohibited. Background check. Definitely want to get a background check. You want to get a credit check and probably a reference check. And you want to get confirmation on their income if you're going to do this for passive income. I know that Joe would love for you to call him if you could get a lease agreement for sure. That's why I put his name on this one. But this is an example. This little picture here is an example of what an accessory dwelling unit might look like. And then I think I've got another picture. Oh, here you go. This one, shift gears. We're away from the accessory dwelling unit. Done with that for the minute. And now what you should know about buying a foreclosure. And I'm going to tell you right off the top that you will never buy a foreclosure that looks like this house. I mean, this is a gorgeous looking house. Now you might get a bargain, but you got to plan on making repairs, and you might get an opportunity, but with that opportunity comes substantial risk. The benefits, you may avoid a bidding war. You may not. I mean, there may be other people that are looking to buy that property too. If it looks like that, I guarantee you'd have that. But the other benefits are you can renovate this to your own taste, and the repairs can increase your equity, particularly if you do some of the work yourself, or you have somebody that's really good, that knows what they're doing, that can put kind of like an extra touch of coolness to them. Here's the thing that you got to watch out for when you're doing renovations. Sometimes you uncover things that you didn't know were wrong, and it actually ends up being more expensive than what you expected. So that's just one of those things that you have to be aware of when you make a budget. You want to have at least a 10% over budget to be able to deal with some of those surprises on there. All right. But buying a foreclosure, that's a real deal. So a foreclosure home inspection, well, this is a big deal. And I was hoping, Joe, when I put this together, he'd be here. But foreclosed homes have certain issues that can arise that are unique and may need to be examined differently than just a regular house. Now, obviously, the home foundation, the structure, the plumbing, the electrical, the roofing, HVAC, the service. But gosh, you also, if it has a swimming pool, you want to get that looked at. You might have a separate inspection for that. You also want to check for the pest, a termite check. You also want to look at the trees, if you have trees, and the grass and the lawn, and how all that's been maintained, if it's been maintained at all, so that you are not going to be biting off more than you can chew. So again, call Joe Salas at 346-224-4224 for any information if you're looking at that. Now, the other part I think that I was going to go over here is, where do you find foreclosures? Well, again, excuse me. Joe Salas would be a great realtor to call, but you could call anybody really. On the HAR website, there's probably a slim list of foreclosures that are on there. And what happens is, after the bank takes the property back, a lot of times they contact a realtor to put it on the HAR website, but they don't do it. They don't do a lot of stuff before then. In some cases, they try to sell it with the realtor's spread or reach prior to putting it on the MLS. But you can find them on the MLS. But you can also go directly to the Freddie Mac website. You can go to the HUD website, Fannie Mae website, HAR.com would be the other one, and you can just look on their search bar for foreclosures. And I pulled up a list today, if I have it here. I don't think I have it right in front of me, but I was impressed with the number of homes. You just type in either a county or a zip code or something like that, and it'll take you to where the properties are. Now, I had to spread it out into almost a Texas search to get any kind of volume, but again, you can get a real bargain. And this is consistent with what a bank-owned foreclosure looks like. And everything's boarded up. And the main reason is to keep people out of that house, to just do the squatting thing. But you really want to check. When the problem with foreclosures, I find, is that when people leave a foreclosure, when they've been foreclosed on, they're usually not happy. And in some cases, they will do things that are negative, or that will negatively affect the house. So you just have to look for those kind of things. But get with Joe, and he will share with you those kind of things. All right. So we talked about, should it be foreclosures? You got to be careful. You got to have a budget, and then where do you find them? So this last point, well, this isn't the last point, tax deductions for homeowners. So I'm shifting gears. Normally, we talk about first-time home buyers and how to buy houses and that kind of stuff. And we did that the first part. But these are for people that are already owning a house and may not have been taking advantage of some of the deductions that you have access to. So this is, again, I'm not a CPA. I don't claim to be a CPA. I put in my notes here that you should contact your CPA for details. But there are 4 things that are real easy. Mortgage interest is an itemized deduction. There are limits to the deductions, so check with your CPA, okay? But and all that means is, when it's an itemized deduction item, that means you're not taking the standard deduction that the IRS gives you, okay? So you're itemizing your deductions. Same thing, property taxes is another itemized deduction, and this amount has a limit of up to $10,000. Now, always going to give this disclaimer, that number could be higher than that. The article I was reading used that number, but it could have increased, and it may go down. Now, discount points. This is something I feel comfortable talking about, because you pay discount points a lot of times when you're buying the rate down. There are very specific reasons when you can pay discount points and get to deduct them, and that would definitely be a valid reason for paying discount points. My general conversation about discount points is I don't love them because I think it's not necessarily a great investment. But if you have paid discount points and you fit within the guidelines that the government allows, and there are very specific ones, heck, you can write it off. And these days, with rates as high as they are, there are a lot of people that are buying points. Finally, one that I think is a very good one is a home office. You can write off, particularly with COVID happened and a lot of people changing the way that they worked. You can write off a portion of your home based on the square footage that you're using, and you get to write off a certain percentage of the cost of living there. I love that idea. And of course, anytime you can save money that you would be paying to the IRS and do it legally, I think is a win-win-win. I do encourage you, again, to contact a CPA for details. He'll give you the parameters of what you can and can't use. But anyway, I think that would be very helpful to a lot of people. And then bond chart. So this is our bond chart from today. Let me see what I can do here. Well, I don't think I can do anything really. Let's see. Full screen layout. There we go. So I want to show this. So the bond market, as it goes down, this is an example of why rates have gone up. You can particularly see that I think this was, gosh, this was last week, if I'm not mistaken. Well, I got one. This is today. Tuesday. That was Friday. Yeah, I think this was Saturday. no, it wasn't Saturday. It was Monday. And Monday, after this weekend, when we had the Israel Hamas thing, this is the first positive sign of anything coming. It could have been this one, but that turned it around from a long line of negative reports. And after that, one of the things that I mentioned in our session last week was talking about ultimately, I thought it was going to be bad for interest rates just because the potential for this to be an inflationary war based on the fact that it's going to disrupt the oil business. And I think I said some things that were incorrect last week. And if anybody challenges me on that, I admit it. I don't always get the facts all right. But in this particular case, the market so far this week and the last part of last week has gone straight down, which means rates have gone up. And I've got a slide towards the end of this that will show that. So, okay, we're there. That was helpful. All right, so this is why I think this is important. This is a 49-year average monthly price movement. And if I was going to be buying a house, one of the things that I would not do is I'd try to avoid March, April, May, June, July. I'd avoid those 2, 3, 4, 5 months because it seems like that's when the prices are higher. I would focus my efforts on buying in January or October, November, December. Now, to fortify that, this is the buying season, and people are smart in the buying season. They keep their prices as high as they possibly can because there's a lot of buyers out at this time. Thus, when the market cools a little bit, and this is just this happens year after year after year, it's consistent. There's a good time to buy and a bad time to buy, or not so good time to buy. And most of the people buy in this cycle. As a matter of fact, I think it's like 60, 70% in this 4 or 5 months. And the rest of it goes into these slower months. Now, in some areas where the weather's cold, I totally understand that. In Texas, I don't know why it does that way. Now, in this next one, this is units, homes sales by month, and it looks a lot like that price one. Again, you've got January, February, and then it starts going up in March, April, May, June, July, and August, and then it comes back down. There are less units on there. Now, here's why I think this is important. A, there are less properties, more people fighting for them during this period right here. But there's prices can be lower. People are more willing to negotiate, and there's just less people out there. So you're not competing with as many. And so you got prices are lower. There's probably more inventory in this October, November, December, January period. So it could be a very positive way to buy. So this would signal to me, as being a contrarian, I guess, if you would, is this would be a good time to buy a house during this next 4 months. So anyway, hopefully that's helpful. If you are considering buying a house or you've been out there shopping anyway, just keep in mind that this is a real deal. That first, this chart that we had here, this was a 49-year average monthly price movement. And then again, this one comes straight out of the Real Estate Center at the Texas A&M University. Very solid information. So thought that was important. I wanted to share that with you. So I'm not that thrilled about sharing these rates with you, but based on the interest rates today, a 30-year fixed rate would be 7.99. And this is with a 740 FICO score. And I think I did it with a 95% loan to value. Now, there wouldn't be a lot of movement. You could do 97% or you could do 80%. There wouldn't be a lot of movement in the rate based on the LTV. The 15-year was very hard to find. Not many people are doing these. 7.375. That's a big spread. There's normally about a half point difference between a 15-year and a 30-year. This is actually more than that. It's 5/8. So that's a big one. Jumbo 7.875. I couldn't find any arms. Right now, it's one of those unusual times when long-term rates are actually less than the short-term rate. So not many people are doing ARMs right now. Not much of a reason to do ARMs. 30-year FHA, 7.375. You can see between these two, these compete with each other. The rent rate is generally much better on an FHA than it is a conventional. The difference is the FHA, the way they treat mortgage insurance in a long-term manner is not as good as it is in the conventional realm. And then a VA loan was just a little bit less than the FHA. So that's important if you're a vet. Best loans going is the VA. Of course, USDA, I didn't put that on there. I could have. Their rates would be consistent with the FHA. All right. So this is a chart that I like to leave on here. I'm not going to go over it today. But listen, I want to thank you for staying with me. And hopefully the little video I put on earlier was interesting. I thought it was. Again, much thanks for watching. Hopefully you'll give me a comment or subscribe or just make a comment. Let me know how we can make this better. In the meantime, we'll close it out until next week. Hopefully I can get Joe back here and I will talk to you guys then. All right. So have a great day. Talk to you later and go Astros.